What is the second most important thing a landlord needs to do? First, obviously, is tenant selection. The second one is important because no one, and I repeat, no one talks about it. If you're doing the first, great, but if you're not doing the second, bad. Let's have this conversation with Coach Carson, man. How you doing?
Doing great, Michael. Well, I'm a little tired, I have to admit, from getting home from your event, which was amazing, but it's a good tired. I like it.
Yeah, I've heard from lots of folks. A couple of things, Coach. First off, I knew your presentation would be amazing. More and more folks, the lumberjack and I both had pointed at your presentation, and specifically that one slide that had that little asterisk that said enough as the highlight of our event for us individually. So you've got a couple of the rock stars pointing at that.
Yeah.
What I didn't know, Coach, was how you would be after and before the presentation. What do I mean by that? Sometimes you come in as a celebrity and then the celebrities disappear. You were there the whole event. You were gracious with your time. You went back in the podcast room and were interviewed and were interviewee. Um, you were just the salt of the earth, great person. Thank you for giving back in such a massive way. The audience obviously loves you, and the audience is important to you because clearly you were there and you're exhausted still a day after. So thank you, thank you, thank you.
Oh, of course. It was my pleasure. The celebrity word doesn't really work with me anyway. I'm part of the crowd. So just thank you for having me. It was fun. I loved it.
Yeah, that's cool. Well, let's get into it. We've only got a half hour together. Let's talk about the second most important thing a landlord should do, and nobody talks about. What is it?
Yeah. So the reason I wanted to talk about this, my bookkeeper, I mean, my CPA, my person who does my taxes is always like, Chad, you have the best books. I'm not trying to just blow steam at you, but you need to teach the rest of my clients how to do bookkeeping so it makes my life easier. And I said, so I've been thinking about this. I'm going to start talking about this more on my YouTube channel. I'm going to teach it more. But
Awesome.
because having good numbers, I compare this to everybody's either heard of or seen the movie The Matrix, where Keanu Reeves is a cool guy who's dodging bullets and everything. But the coolest thing is he sees the entire world in numbers, and it slows down. The whole world slows down for him, and that's what I look at when you understand the financials of your business. Literally, you can see your entire business in numbers. That's what the pros. That's the way the pros do it. The corporate people, but also the small, mighty investors. They see when there's good things happening. They see when there's bad things happening, and then those numbers can tell you when to jump in and solve something, fix something. They can tell you when to do something better. So I want to unpack, and I want to hear from you because I know you're a pro and you're doing this too. I like to compare notes, and I want to share with people just kind of a higher level of what my financials look like, how I track them, why I do it, how I do it, and then in the future we can
Yeah.
unpack it even more.
Yeah. So when I think about this, right, when you're just a W-2 employee, your taxes are kind of easy, right? You can almost do it yourself, which I wouldn't do that, get an accountant behind you. But anyways, but once you start running a business, which being a landlord is, the numbers, it's all about the numbers. And oh, by the way, you got to be able to track them, right? Because you're reporting to the IRS. But really, when you get the numbers right in my mind, not knowing where this conversation is going, is I can go back to day one of my books and look at how different buildings have performed, right? Usually I'm buying junk. So the first year is heavy capital investments. Then after year two, year three, year four, and I can start to see issues or challenges. And one thing Olivia and I have done over the last, I want to call it 2 years, is we've taken the worst performing property. And again, it's not worst performing of the year, but of probably the last 5 years. And we've sold it. And what we've seen just by getting rid of the worst one, which for us was on Glen, it was a triplex on Glen. We sold a building. Our cash flow went up.
There you go.
Kind of a problem property, I would think, right?
Yeah.
And then just last year, we sold a property we called 10th. And we're doing our numbers now because we're recording this in February. Our appointments early March. So I have a feeling the same thing will happen. So when you look at these, I think you break them down into three buckets. How do you see the world?
Yeah. The first one is the one everybody thinks of and talks of, and that's all they focus on is doing your taxes. And it's important. Like there's no doubt about it. You have to do it. There's only two guarantees in life: death and taxes. We've heard that one.
Yeah.
So you have to do this. And so when you track your numbers for your properties, you're basically putting a historical record of the income and the outflow from your business, the income, the expenses, the purchases you make, and you have to report this to the IRS. So there's two categories of things you need to be thinking of within that first bucket of tax data. Is number one, you need to just track it somehow. And I do this in a couple different ways. I now use QuickBooks to track all my business. That's a software. There's other
So
software.
let me ask you about that. Do you I'm guessing by property or by address, I'm guessing.
Yeah, the good thing about QuickBooks is really versatile. You can track every income and expense. There's a category for every one of those, but then there's also something called classifications. And so every property you can assign a class and just describe it 123 Main Street, 123 Maple Street. And so basically you can do a report that says all the income and all the expenses for your entire business. Or you can do another report that says, give me a breakdown just for this one class, just for this one property. That's where it gets so really useful. So every time you enter a check, every time you pay a bill, every time you make a deposit, you can have a little button that you click, make sure I have to put a class on there, or otherwise it won't even let you close the window.
I like it. Yeah. You got to associate this with something. Yes.
Yeah. Yeah. So that's
okay.
Yeah. Yeah. So, I mean, there's a lot of, that's the nitty gritty work of putting in your books. I've hired bookkeepers in the past. Right now, I don't have a bookkeeper. So my 2024 to-do list is to get a bookkeeper, because I've been doing this for myself for the last couple of years. Even when I was in Spain, that was the 2 hours a week that I worked was doing bookkeeping. But the point is to have good books, you need to accurately track what happened, the income and expenses. But then also you have to have, in case you get audited, you need to have proof of those expenses.
Oh yeah. Having gone through an exhaustive audit that took 13 months, you are absolutely right.
Oh boy.
If you can't give proof or whatever, I forget what they had a word for it, but I'll just call it evidence. If you don't have evidence of it, that's coming out. So have evidence.
Yeah, that $5,000 expense that you thought you had and you forgot the receipt, they're going to say, well, prove it.
Gotta go.
Where to go? So now
it's on you at that point.
Taxes on that $5,000. So as if you made a profit 3 years later and you have to pay taxes on it. So the point is that's just a discipline. Like that, this isn't something. This is like getting your teeth clean, going to the doctor to annual physical. Like nobody's like, I love doing that, but you got to do this stuff for your taxes because it's part of life, right?
And again, this is probably because I was an accountant out of school, right? So I was in the debits and credits, and I did general ledger accounting and all of that. So always looked at actually told my CPA this. I said, feel like I'm going to my dad to show him my report card. So I look at the tax years. It's my report card. How do we do? And the only way to really know how you do is to take care of it every day. It's you don't want to go to your tax guy with a box of receipts saying, figure it out, because that's not a good idea. You got to have the discipline weekly, monthly at the latest. So to me, it was always, hey, Dad, here are my grades. How'd we do?
Yeah. And, there's also a lot of sloppy investors who just think, well, I'm just going to have this vague thing. And if I don't know what's going on, then neither will the IRS. And wrong. Like that's
wrong.
But the other problem, if you have good books, your CPA can help you as an advisor and say, hey, there's a legitimate legal way to save taxes here. There's this new tax law. There's this new thing where you can deduct more things in 1 year. So like having good books gives ammunition to your tax advisor to then save you money. Like you can pay for the CPA's bill every single year if you have some good tax planning. And that's what having good books allows you to do. So there's a selfish reason. It's not just I like the report card metaphor, but it also can make you money by being a smart tax investor.
No, I totally agree. And like you said, kind of in the opening, that's the one that everybody thinks about, which means the next two probably get ignored. Where do you go next?
Yeah, these are more important. The taxes are just what you have to do. They're like going to the doctor. You got to do it.
Oh my goodness. All right, let's go.
So the second one is they're called KPIs, and you've been in the business world. KPIs are your key performance indicators, and every business worth their salt has these. But for me, what this looks like, this is the kind of an ongoing process for me. I started it a couple of years ago. I actually do it in my Coach Carson business more regularly than I do my real estate business. But this is where every single month you pick just 5, 6, maybe most 10 stats in your business. They're the most important stats. Think of this like the pulse. If you were a doctor or a nurse, you're going to take your pulse on your patient, the vitals on your patient. These are the vitals of your business that if you track them consistently and in real time, that's the key, then you can tell the health of your business. And so for me, that's just critical. That's like me. So I look at the amount of money coming in. So the gross income, the total rental income for my business for the month. And I have a number. I said, this is what I should be getting coming in total, not by property. This is the total money I should be collecting on a monthly basis. And this is the standard. If I'm below that, what's wrong? What happened? If it's above that, okay, that's good. And so most of the time, 99% of the time, it's just like, oh, normal month, good. Let's keep moving. But every once in a while, there's like, why am I 20% less on my gross income than I'm supposed to be? Now I'm looking at the report. Then I dig into the reports that the property manager gave me. Then I ask questions. Then I might realize, oh, we've got 5 properties that are vacant. And why are they vacant? And how long have they been vacant? And so this is the matrix. This is the matrix stuff. Like if you see the world in numbers, that one number in 5 seconds can say, alert, alert, you got something going on in your business. Dig a little deeper. And I do that both with the income. I do it with the expenses. I do it with the cash flow. Those are my big 3. But
let's poke at that a little bit, because there's so many things that you bring to the table that could go deeper. Let's talk about that. You said revenue or income, expenses, cash flow.
Yeah.
That third one is actually the most. It's like oxygen. People don't realize that you could go broke with high income and low expenses, in theory, if you have a mismatch between when cash shows up and when cash goes out. Cash flow, like, how do you watch? Like, let's talk about that third one, because cash flow is everything, but almost nobody, like, I could ask most people, how much do you make? 90% of people can give me a number. If I tell people, how much do you spend? Probably half people could give me a rough estimate. No one, probably other than you, could tell me what your cash flow is. So let's talk about that.
Yeah, here's the big idea to remember. Category number 1, taxes. It might say that you made a profit. Let's say it told you made a profit of $100,000 last year.
Yeah.
But you could have a 0 cash flow and have $100,000 profit. Let's tell people how that works. How is that possible? How is it possible you made $100,000? Let me tell you how. Number 1, every time you pay principal on your loan, let's say you pay $500 in principal one month, that is technically profit. It wasn't an expense. You paid down principal. Yep. But guess what? Who got that cash flow? Did you get it, or did the bank get that cash flow?
Yeah, it's a negative on yours. You're down 500.
Yeah. You're down $500. So let's add, multiply that times 10. If you have 10 properties, 10 times 500, you just made $5,000 this month, and you made $60,000 for the year, and you might have been negative on your cash flow.
Yeah, that 60 grand is a negative, right? It's a forced savings. It's a this, it's a that, whatever you want to call it. But on your taxes, it looks all good.
Yeah.
But no, this is why cash flow is the one.
Cash flow is key. Yeah. And the reason I started doing this, Michael, was like back in 2016, 15, I was still recovering from the Great Recession. And actually, I tracked this cash flow. I say that I just did this the last couple of years. I've been tracking cash flow for years and watching my bank account, mainly because
the necessity.
I survive. I said, crap, I'm not going to survive for the next year in my business. I better watch this.
Part. A lot of people are income and expenses. It's the cash flow, folks. Yeah. And there's a balance sheet, there's an income statement, and then there's the third and never talked about, but most important, cash flow statement.
Yep.
The game, cash flow, right over here, just coincidence.
I love it.
It's about cash flow.
It is. And if you want to survive in your business, so I track it every month. I know. And so first it was survival, but then once I moved into like kind of the harvester phase, like I talk about the third phase where you actually want to live off your income. Yep. Everybody talks about building wealth with real estate. I know very few people, you're one of them, I'm one of them, who actually live off their income and say, hey, this is something I can just live off of. And the way I do that, the number one thing is watching my cash flow. And I watched it for years and said, okay, I finally feel confident. My business partner and I, we didn't pay ourselves a lot of cash flow. We paid ourselves like a $3,000 dividend for a long time, even when we're making a lot more money than that, because I wasn't confident that the business could distribute that money until I tracked that cash flow for a long period of time and said, okay, even on the downs, even when we're our low point of our cash flow, because it goes up and down, we could still raise our dividend or equivalent of a dividend and pay ourselves more money. And so that was 2017. I took a deep breath. I started paying myself more money, and I moved to Ecuador for a year, knowing that I could actually survive off of it.
That's amazing. I love that. What do you got for if you did number 2 was awesome. What's number 3?
Number three is you talked about it a little bit earlier, is the strategic chess match of rental properties,
Yes. I
is
love that.
understanding your numbers. You go back in time and you say, here's a historical record of this one property. And I think what, what I've coached a lot of people over the years. So many people think, they say, I made a lot of money on this property, or I did really well on this property. And then I dig into the books with them and I say, no, you didn't. Like
No, you didn't.
you didn't make money on that property. Show me. And
Uh,
this is the truth. Like, we have to look at the historical record of our property to really understand if it did well, if it didn't do well, and for us to be able to make strategic decisions with each property. Each property is like a chess piece. And so you said earlier you had that triplex that was not a good performer. This is what I do. I make a spreadsheet of all my properties over time using the QuickBooks data, and I will rank them, and I'll say, these are the ones doing really well. These are the ones I like.
exactly. So
The
far,
ones
where
that
we
the
do the
ones
same.
that
This is identical. I love this.
the ones I wanted to I call it pruning, or I used to call it like culling the herd. I had
Oh
like
yeah.
a list of properties at the bottom. Like, I got to cull these properties.
You
Like,
got to you know how
it's
you
not
keep a
working.
healthy tree? You trim it,
Mm-hmm.
right? You trim it. And I mean, just for example, one of the things, I mean, this was probably 5 or 6 years ago, but one of our properties, we saw the water bill go up. Started gradually going up. And then over a couple of months, there were some big spikes. There was a significant water leak that was not reported, right? I mean, that's just one example by watching that. And if we were just looking at the cash flow, we wouldn't have noticed it because rents went up and kind of would have hidden that. But one of the things that I do in this strategic chess match is I will take all expenses on a property that have more than 3 years of history, and I will chart it out. And when you chart it out, the lines kind of all look the same. But if there's like one spike, it's like,
Yep.
oh shit, I better look at that thing. What
Yeah.
was that?
Yeah, graphs are so helpful. I'm a visual learner,
Yeah.
so when I see that red line, to spike and go up, or that gap is what's important. That's the cash
Yeah.
flow gap. That's the gap between your expenses and and if the rent goes up, it kind of bails you out. But maybe your property taxes have doubled in 3 years, and your town is going broke. You need to know that. You need to know these kind of things.
And then you could do capital expenditures. Again, one of the things going back to number one, working with your accountant, especially if you're a W-2 employee, you can't carry forward your loss if you make over whatever that number is, 250 or whatever the number is. So sometimes you're going to do it as a capital expense, so you stretch it out. Sometimes you'll have the option to make it an expense in the time. Again, talk with a CPA. But these are all the chess matches. And again, not enough people talk about cash flow. It is the blood of a business.
Yep.
And I love that.
Final piece, Michael, I would say this is in the chess match still, but
Mm-hmm.
one of the best things I've done, and one of the reasons I started making my YouTube channel, I started drawing these little analysis of a property, was I learned a lot of data. By paying attention to the data for my actual properties, the winners and the losers, I was able to then model my next purchases, be more accurate with my next
Ooh.
purchases. I was able to be a better investor
Oh,
in the future. So this is about the future, not just the past. You can
I
actually
like
learn from
that.
it. And
I had
so
not thought about that.
yeah, so the models of what's a good deal. Like, for example, I made a video that's coming out here in a couple of weeks where I'm showing how to analyze a single family house. And I shared some of my data. I said, hey, across all of my properties, I've averaged about 15% in maintenance and expenses. So 15% of the rent has been the average maintenance and expenses together.
Now, what was the duration? Was that a 5 years of history, or what was that?
I've
10?
had, that was about, last time I looked at it, was about 15, 16 years.
So I
I
just
need to
want
update
people to
that.
realize how rich that answer is, right? So for 15 years, you've been collecting this data over all of the units. You then put that in a master thing. You divide by the unit count, and your historical average for a year is 15%. By having that, you became a better investor because you will use 15, or maybe you'll use 17 to give you a spread, but makes you a better investor because you have
Yeah.
actual data.
Yeah, exactly. That's real. That's real numbers. And
I like it.
that gives you confidence. So when you're making an offer to someone, you're not just saying, I think it's that, I think it's that. It's like, well, no, I actually own a property in that neighborhood, and the expenses were that on that property. You now have unfair advantage over other people because you have real evidence, you have real confidence, and confidence is the currency. Confidence is what makes you a good investor. It allows you to walk away from some deals that are just not good, and it allows you to make an aggressive offer on other deals where you're like, all right, I know what this can do. This has got a lot of potential because I've tracked another similar property nearby, and I think I could do just as well on this one.
Yeah, I'm going to be watching that video. I am curious, and if the answer's in the video, just tease it. Go ahead. Did you see any differences like a house, a single family versus a small multi like duplex through quad versus perhaps something bigger? Was there anything that kind of stood out as, hey, it's different? Anything like that?
I need to get a little more granular. I'm gonna dig into it. That was over all my units, and a lot.
Oh, okay.
I'd say all mine are skewed. I have small multifamily, so
Hmm.
it's a little skewed. I think those are a little bit more efficient. Single family houses are not my most efficient cash flow investments. They're
Okay.
typically over time. Let me say this: the maintenance on a lot of the properties there's a lot of maintenance on the front end. Typically,
Yes.
the margins look really bad on the front end, but over time, if I can keep a
Mm.
tenant there for 10 years, then the vacancy stops. So I think single families become much more efficient over the long run. Whereas my college rentals, they on paper produce more cash flow, but there's always turnover. There's always
Hmm.
turnover. There's
Hmm.
always maintenance. There's a lot of things happening. So I like this thing. I like them both. I like them for
Yeah.
different reasons. But that's a to be determined on whether
Sure.
the maintenance on each of those is different. I'll have to check that out.
And I guess the last thing that just sparked in my head was average turnover. One of the things that I did, and I wanted this was probably 3 years ago, so I should probably go back and check it. But my average turnover in a house, like long-term tenant house, was 8 years, just over 8 years. And my average turnover I just did house and multi, so a duplex through 20 units. It was all the same bucket. Maybe I shouldn't have, but that's what I did. Was over, I think it was just over, just under 2.5 years.
Yeah,
I don't know if you see kind of similar things or not.
yeah, yeah. Well, my multi-families are a year and a half. I'm a
Oh,
college town,
yeah,
buddy.
college town, baby.
Yeah, I mean, I've tried. I think I'm leaning more towards two. I'm kind of trending up because we get more grad students and long-term
Mm,
students. But it's still. I remember 2 years ago, our property manager said, "Yep, we got about 50% of the units we got to fill up this year." That means half
yeah,
of people are moving.
sure,
And
that's right.
but the cool thing in a college town, this is very nuanced, but
Sure.
every August is our lease start date. We start leasing now. It's earlier every year, but we start leasing in October, November of the year before
Oh, wow.
for August. That's just the way it works in our town, and so that's good for
Okay.
me. That's good for. I mean,
Yeah.
the students want to do it too, but it's good for me because I can test out new rents. I can say, all right, we're going to bump the rent a little bit. If
Hmm.
people are like, no way, I'm not renting it, so we have time to come back down. And
Yeah.
so we don't have vacancy. If we have a vacant unit, that's a big problem. We have a
Right.
little vacancy period because we have 15 days
Yeah.
between when the tenants move out. So we have 14 days we're not getting rent. But anyway, that's kind of a cool nuance
Yeah.
of college rentals.
Oh, I love it. Small and Mighty Investor was a highlight of the event. You kicked off day two. I could not have imagined a better presentation for opening of day two, man. I appreciate you. The audience loved you. Where can people find you?
Coach Carson, everywhere you look on YouTube. I have a podcast called Real Estate Investing with Coach Carson. So if you listen to podcasts, check that out. And I wrote a book called The Small and Mighty Investor. If you want to check the business model for small investors, not people who are trying to 10x and have a
Yeah.
thousand units. This is for those of us who want to buy one rental at a time, have enough money to do whatever you want to do, but be a time billionaire is what I like to call it, where you can
Yeah.
go travel with your family and do what matters.
Folks, go buy the book right now. Small and Mighty Investor, Amazon. Have fun. Buddy, take care of you. Thanks for coming. You're amazing.
You too, Michael. Thank you.
Uh-huh.